Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. And I've put together the top 7 key market drivers I look at when analyzing a new real estate market. Go to sethferguson.org to download your free copy. Our guest today likes to take real estate to another level, literally. He specializes in at-a-level renovation, but also has a track record from wholesaling all the way to new construction. Gabe DaSilva is the president of the DaSilva Group. Gabe, welcome to Purchase to Profits. It's great to have you on the show.
Thanks, brother. Happy to be here. Excited.
Yeah, really looking forward to this. So let's dive right in and talk about your real estate goals right now.
So where we stand right now is very much different from where we were 5 years ago when we got started. So This is a hell of a way to kick it off. So we cut our teeth in the fix and flip game, specifically at a levels, which you and I, I'm sure, talk about while we're here. But what we've come to find out is that it's a very active way of generating revenue. We're looking to transition more into passive. That's what real estate is all about, after all, is the transition to passive. And that's where we find ourselves now. Active at-a-level style renovations, big capital and labor intensive fix and flips have served us very, very well to get us to where we are now. And those are our core competency, and we'll continue to do those. But we are transitioning into a more passive game, and I guess we could talk a little bit more about that as well.
Yeah, for sure. So let's go into it, because a lot of people, they get into real estate, either they're wholesaling or they're doing flips to generate those lump sums of cash. But at some point, like you said, real estate's all about the passive side, and that's where the power is. So at what point did you realize, hey, listen, I have to start looking at a more passive approach to real estate?
So I feel like we're jumping from closing to closing. We have been for a very long time, and it's like robbing Paul to pay Peter. Yeah. And that's just not sustainable. It's very stress inducing. And sure, the paydays are big when they do come, but they come so infrequently that it got to a place where we were servicing, at the time, $25,000 or so a month in debt service. And I know some guys out there, even my lender, when I told him that, he's like, I'm servicing twice that. So that's not even that big a deal for me. But for us at the time, like, that's the stuff that keeps me awake at night, is servicing a lot of debt. So I came to realize then, and this is probably going back about a year, is when we were at our worst in that sense. Like, but that's also very good, because when you cash those in, you cash them in big. Yeah. But yeah, that's when it kind of came to light. Like, this is very much active. We are still very much operators, technicians. We are chasing, grinding, looking for deals. And yeah, of course, that's our core competency. That's what I believe we do better than most anyone else. So we'll always continue to do that, but that needs to be the means to the end. And the end is always legacy wealth built through passive income. And so, yeah, I'd say about a year ago, that's when that kind of like switched.
Yeah, gotcha. And so what sort of assets are you looking at now that will give you that passive side of things?
Well, so to stay true to what I believe what our core competency is, and what we really are great at, is forced appreciation. We can add value from the construction standpoint. So I'm looking at just blown out, like 2, 3, 4, 6, 8, 10, 12 unit buildings. That's where I see us going next. We have the construction savvy. We have we're vertically integrated. So we've got the supply company. So we're going to be able to buy materials cheaper than most anyone else. We can run projects tight. We've proven that. That's where I could see us going and adding value. And what better way to create a portfolio at the end of the day, like you're talking about an A-class asset, because we're going to wind up with something that's completely throttled, burnt out. We're going to rip the thing down to the studs, and we're going to come in there and do what we do on our single fams, right? We're going to do it on these bigger multis. So within reason, I'm not quite sure what the threshold is. Like, at 16 units, does that change? At 22 units, does that change? Well, I don't know. But I know where we're looking right now is stuff that we can wrap our head and hands around, and bring value there, and ultimately portfolio that stuff. Yeah. So that's the play right now. That's where we find ourselves right now.
Yeah. And what do you have to change with how you think about real estate in order to go from doing those single family homes without a level to, let's say, taking down an 8 unit? What has to change in
Yeah.
your head?
So that therein lies the challenge. It's like you've conditioned yourself to look at everything a certain kind of way. And it's, like I said before, it's served us really, really well to go and identify dated capes, ranches, bungalows that we can put second floors on, and we could really force appreciation by doubling the square footage. And I could say this stuff in my sleep because we've been doing it so long. But now all of a sudden it's like, well, how do you transition your mindset even? And like, you got to look at deals different. You have to model deals different. And that's been the challenge. I think I have to remind myself every day that like highest and best use is the math that needs to be done. And like your core competency is what it is. And you'll always continue to do that and be very, very good at that. But like, do your highest and best use math, step away from the deal, look at it from up here and say, all right, well, what can we do with that? What else can we do with that? I guess is the question I find myself asking a lot more now. So I don't know if that makes sense, but that's kind of how I'm looking at it these days.
Yeah, that makes perfect sense. And I'm curious, how did you get into the add a level to begin with? Because with my own house, I added a second level, and that was a project and a half. So what prompted you to do this, every day?
Well, I guess going back, my background is in finance. And so I've always had a really good handle on complex financial structures. And I've always been able to wrap my head around like a heavy lift from the finance standpoint. So numbers never really much scared me. I was always able to kind of figure out where to find the monies that I needed to find to do what I needed to do with. Then I kind of would go and look at the project itself from a construction standpoint and apply that same mindset. Of course, I've got a familial background in that. My dad was a builder. And so looking at construction that way, he always taught us, don't do that. He never wanted us to work with our hands. But then having what I had as like a finance background, I kind of just thought about the construction piece that way too. If that makes sense. It's just like these projects are big, they're overwhelming. A lot of times someone who's got like the financial wherewithal is overwhelmed by the construction. The guy that's got the construction savvy, he can't raise the capital. And so I kind of brought the two together, looked at them both the same way. And so what looks like a heavy lift to most people from a construction standpoint to us looks like a cosmetic rehab.
Yeah.
And the same thing applies with the financing. We just kind of look at it and it's like, all right. And that's not meant to say that we're any better than anybody else at any of this. All we do better, I believe, what we're really, really good at is the systems piece. And so I'll figure out a way to systematically look at it and break it down so that way it's not overwhelming. It's all bite-sized chunks. That whole thing about like, how do you eat an elephant? Like one bite at a time. That's how we look at it. That's how I look at deals. That's how I look at how am I going to finance this? Well, if I have to raise $500,000 tomorrow, like that's really challenging. But what if I look at it and I say, I know that I have this on the horizon. I need to chunk it this way. I need the 90% I need 10% of the purchase price. Then I have a lender that'll come behind with the balance. I need to borrow 100% of construction. Same thing with the actual construction. Look at it like in bite-sized chunks. If that makes sense, that's kind of how we've been approaching it, and that's where the comfort level comes from.
Yeah, no, that's a good message. Focus on the systems, because I find lots of people, when they're getting into maybe their first or second deal, they can really quickly become overwhelmed with all the different moving parts and everything that goes together. And you add a couple zeros on the end of of everything, people get really intimidated. So I like that. You focus on the systems and just take it one little piece at a time. Mm-hmm. So have you developed any routines or rituals that have really helped make you successful?
Well, I'd like to tell you that I got it down to a science, but I don't. I absolutely don't. What I do know is the miracle morning. I don't know if you're familiar with that, and I'm guessing you are, and a lot of your listeners might be as well, right? So Hal Elrod with Savers, and I try and hit them all. The reality of it is I very rarely do. The one thing that makes a huge difference for me is getting up before everybody else. I genuinely believe that. I'm up ahead of everybody else. I'm active. I'm feeding my mind. I'm getting going long before my competition is awake. And I don't really think of it as competition. I mean, there's a Simon Sinek thing on YouTube if folks want to go and check it out, right? Between competition and rivals. Like, I'm not looking at anybody as competition. Everybody's a rival. And the distinction there is that people are kind of like elevating one another together. So we're all looking to kind of grow and push together. And so I kind of look at it like that. And I get up early and I do my work. I feed my mind. I get ready. And by the time the team gets going, which for us is 7:30 our time, I want to be ready. I want to be able to bring it for them above and beyond anything else. And so even before that, when it was just me, everything needed to be thought of and kind of structured that way. It's really just about positioning and just getting your mindset right and just knowing like, hey, like I may be a team of 1 right now, but I need to mentally prepare myself to be a team of 3, 6, 12, like down the road. And so attacking the day that way, structuring the day that way. Like I said, I'd like to say that I got it down and that I nail it every day, but the reality of it is I absolutely do not. But one thing I will not give up. Like I will not trade is my Sunday sessions. And that's like, I'll lay out my intention for the week. I will sit there, I will journal. I'll carve out 2 hours on a Sunday to lay out what the upcoming week looks like. What are our goals? What are we looking to accomplish? How do we drive that come Monday morning when we do our team huddle? The Gary Keller, the do one thing such that nothing else matters. Do one thing well such that nothing else matters or is unnecessary, and kind of like give it that kind of approach. And so I mean, I wish I could say, man, I nail the savers like down the line, but we don't. We just absolutely do not. But we do what matters, and we're conscious of that.
Yeah. And you said, you're thinking about it. Well, one day you'll have a team of 3, 6, 8, 10. Is that a focus of yours right now, laying those foundations for that larger team down the road?
Yeah. So, I mean, and I can't say exactly where it came from, but I've always ever said we. Like, it's never an I or a me thing. It's always been a we thing. So even when I was alone and getting going, I always ever said we. And so who's we? People would always ask, who's we? Well, right now it's just me, but It's about it's a mindset thing again. And it's like, I'm visualizing us as a bigger unit, doing more stuff, being more impactful, serving more people. And the way to do that is with the ripple effect and with impacting your people. So that's where that comes from. I mean, we're still just a team of 4 right now. But we're doing significantly more volume than guys in our market with teams of 12. It's just, and that comes down to like the mouse, the gazelle, and the elephant. Like what type of business are you, and can you do more with less? And that's a different thing. But I kind of just try and look at it that way and just say, how can we be most impactful? And with what we have, with the resources that we have, and so, yeah, I mean, if people get into the habit of saying we instead of I, that goes a long way.
Yeah. Oh, no, 100%. And, so as your business has grown, have you hit plateaus? And, if you did hit those plateaus, how did you power through it?
So this is a great question. And another question that comes behind this, because we talked about it offline. And it's kind of, so I look at my business with these kind of like 3 little tiers. Not little tiers, bigger tiers. And so we worked really, really hard. And then all of a sudden we found leverage, and all of a sudden we're working really, really smart. Like, wow, like you could do that much with that little. Then I would say like our second tick up was a big deal, which I think we'll talk about next, right? So there's this deal that shifted how everything worked for us. So it's like leverage in a financial sense and realizing you could do so much with so little. Then it was that one deal that shifts everything. The way you look at deals, that whole highest and best use math and analysis we were just talking about before. And then the next tick up for me was the team, which we just talked about, like the value of team. And I don't like calling team assets or leverage, like team is team. And that's why we say we. Everything's about we and what the team can do. So that's how I kind of look at it going back over the last 5 years in this business in particular. Those are the 3 separate tiers. And each one was like a massive shift. So I'm guessing we want to talk about the deal portion next,
Yeah.
right?
Yeah. So let's go into the Keystone Deal. So the deal that made a big impact on you and your business.
So the thing about, so leverage comes first, and financial leverage, I should say, comes first, and realizing that you could do so much more with so much less, and doing that very first flip with my own money out of my own IRA, 401k, you can only go so far. We come across a deal that we have no business doing on paper. You look at us, we're not ready for it. It's far bigger than anything we've done in the past. Everybody in their right mind told us, don't do this deal. Even our lenders said, you sure you want to bite this one off? But what we were looking at the time was the highest and best use math, and looking at like deals are tough to come by. So when you find one, what can you do? Like, how can you really squeeze every last drop out of it? And so I kind of looked at it that way, and it was an at a level style deal here in a town called Berkeley Heights, New Jersey, which is direct train to Manhattan. So it's very desirable. And so the wholesaler that was selling it to us at the time was looking at it as a cosmetic rehab. And so he stood to make 30, 40, 50. I don't know what his numbers looked like on it, if he had done it, and if everything had gone according to plan. But when he brought me in and said, hey, I'd be willing to let this one go if you'd like to do it, I looked, and at the end of the cul-de-sac there, I saw that there were 3 new construction projects trading at 1.3. So there was a bigger builder doing it. And I thought, well, this house has that footprint. Why can't we blow this house? Why can't we create a competing product? And sure enough, we did. And we went after it, and we didn't just go up like we typically would on at a level. We went back and up. Nice. So we doubled the square footage and then some. And another thing that happened in there, I should be, to be fair, we started positioning ourselves at that time by, and this wasn't my doing. This was my realtor partner, who's now my girlfriend, right? She said, hey, if you're going to position yourself a certain kind of way and you're going to create this type of product, you want to compete with the new construction projects at the end of the street. Well, you need to be a builder. You can't just be a rehabber. You can't be 123 Main Street LLC and be trying to sell a product that competes with whoever homes. So we created our home building division. And on that project, we went on to do something like 200 plus K. Our lenders crushed us, but they did well, really, for themselves. They did well too. The buyer got a great home. The numbers all just worked out. But I guess looking back on it now, what it did was it created a mental shift for us where we realized we're not just rehabbers trying to make 20, 30, 40 K on a flip. We are builders that are positioning our product alongside everybody else in the market, better, above everybody else in the market, because I believe that from a quality of construction standpoint and just like the level of finishes, like we could put out a better product, or at least comparable to those, right? And so we did, and that deal shifted everything for us. Yeah. It changed everything for us.
Yeah, you brought up 2 really good points that I want to touch on. So the first one was your girlfriend said you if you want to compete with the builders, you have to position yourself as a builder. I think that's a really good message for anybody involved in real estate, because as soon as you identify yourself as a type of person or as a type of company, you start changing how you act, how you speak to people, how you think about real estate. So what sort of impact did now thinking about yourself as a builder have on you at the time, and how has it changed you to now?
Yeah, it was drastic. I mean, it goes from for us, it went from me kind of operating in the shadows, unwilling to put myself out there and say that I was even doing this. Like, I had just come off another business in the food space. And it's like, well, this guy, he was the restaurateur guy. Now all of a sudden he's the real estate guy.
Yeah.
So I wasn't quite ready to embrace that. And by doing this project in particular, I really had no choice. Are you a builder or are you not a builder? Are you the guy who's putting out the 1.3, like this product, this beautifully appointed, finished, tricked out, like everything about it? Are you doing landscaping, or are you just cutting them a check for $1,000 at closing? Like, that's the difference. Like, those little nuanced things, the signage, putting the magnet on the side of the truck at the time, getting your logo made, and at the time I was making them myself. We were still making this up as we were going along. We were acting as if, fake it until you make it, that whole thing. And so then it works out, and you see it proof itself. And so once it did, I said, wow, all right, well, here's our differentiator. Here's how we can stand out in the market. Let's go build the best product in each market. If we're going to build here, let's try and stand out. And so, and yeah, that changed a lot of things for us. It changed how we operated. It changed who we were on paper, the logo, the branding, the phone number, the website, everything online. I just had to grow to embrace all that. And so we did, and it served us really, really well.
Yeah. And you were saying that your lender was saying, hey, maybe this is a little too big for you guys to bite off. Lots of new real estate investors hear that from their friends, family, other people all the time saying, hey, real estate's risky. How did you deal with that? Hearing, people that are in the space saying, hey, you shouldn't do this. Like, what were you telling yourself in your mind to give yourself the confidence to actually go ahead?
Yeah. So everybody's motivations are different. So you kind of have to take everything with a grain of salt and realize where it's coming from. And I love my lenders, and I believe that they do genuinely have my best interest at heart. And if they feel like you're taking on a project that you might not be ready to take on, they'll tell you. This one lender in particular did so. And he said, I don't know that you're there yet. And so I think that was kind of short-sighted on their part, to the extent that like they may have had a little bit of a lack of faith in you and what you're capable, me and what I was capable of doing, but they were being cautious. And so, and I understand that now, and I respect that. But at the end of the day, like, you need to be your own cheerleader. And if you're confident in the numbers and you know what you're capable of doing, don't let anyone else tell you otherwise. And we were going into a project. Sure, it was more than I had done before. It was bigger than anything I had bitten off, but other guys were doing it. If they can do it, why can't we do it? I couldn't wrap my head around that. I was like, if they're capable of doing it, I'm definitely capable of doing it. Like, I don't see them here on Sunday, and I'm here every Sunday morning checking on this project. I mean, that alone gave me like a little bit of confidence, and you start to like kind of tweak up the confidence level little by little. You're like, well, if I'm here every Sunday, even if it's, and back then I would work Sundays and I would be there all day, Saturday, Sunday mornings. That's a different thing altogether, right? Like that hustle at the beginning.
Yeah.
I was like, if I'm here logging the hours and they're not, like, I'm going to catch up on them. So yeah, the lenders at the time were like, listen, we'll only lend on the 225 renovation cost for the straight at a level. We don't know that this other addition plus going up, plus this whole thing makes sense. So we're not comfortable lending on that. And so that created another thing where I had to go and kind of find those monies elsewhere. But by that point, I was so committed. Like, you were not talking me out of this. I was going to do this. And it was either going to be, it was going to be a big win, or I was going to get knocked on my ass.
Yeah.
And so thankfully it worked out the way we had anticipated. It was a great deal. And I guess the message there is to anybody listening is like, if you're certain of it, and the numbers prove themselves to be true, because at the end of the day, the numbers do matter, go for it. And don't listen to what other people have to say.
Yeah, that's the main thing. You just have to take action and do it, because I talk with so many people where, they say, hey, Seth, I want to get into this in real estate. And a year, 2, 3 years later, they still haven't done anything. So the main thing is actually just do it.
Yeah. On that one, I mean, this one throws me back to 4 or 5 years ago. At the beginning, I was going to every networking event I could get into. And what I challenged myself to do is each time I would come to these events, I didn't know who I'd be sitting across the table from. And when you're doing those intros, the last thing I couldn't imagine myself saying the same thing over and over to the same person month after month. Because I'm not going to come here and give you the same intro each month. When I show up next month, I want to be able to tell you that I took action and I went and I finished my realtor license course, or I took the exam, or I made 100 calls, or I wrote 10 offers or something. I wanted to be able to each month after month, be able to be evolving, growing, and have something new to say. A lot of people, you go to these networking events and everybody just wants to think in their mind that they're investors. It's like, you're not a real estate investor until you buy something.
Yep.
So just because you go to a real estate, an investor event, doesn't make you an investor. Like, you need to take action. You need to buy something. You need to do something. And if you're not in a position to do that just yet, if you're part-time, whatever the case is, align with someone who's already out there taking action. And so that was one of those things, I don't know why, it always kind of lingered with me. So if I'm showing up today, what did I do different this month? I got to have something new to say.
Yeah. Yeah. And actually, that's where the name of my show comes from, Purchase to Profits, because you actually have to purchase something before you can profit. So
Mm-hmm.
I like that. That's great. So how has getting into real estate changed your life so far? But besides the personal relationship, falling in love with the real
Yeah.
estate agent.
The, I mean, it's afforded me the freedom to do what I want when I want, work from where I want. And so, and that doesn't mean to come off the way it might have sounded. Like you have to work really, really hard to build a business that affords you those freedoms. I was in business for years before this, logging countless hours. Like when people say they worked 80 to 100-hour weeks, and you're like, who does that? I work a 40-hour week. Who can work 80 to 100? It is possible. I will tell you that it is absolutely possible. And so, and we did do it in the food business before this, but we were very much technicians and operators, and we weren't true entrepreneurs. And there's very much a difference.
It goes back to the E Myth, Michael Gerber. Yeah.
100%. And so that book resonates with me still to this day when I find myself doing something that I have absolutely no business doing. I remind myself, like, are you an entrepreneur or are you an operator? Do you own this business? No. So that shift, when I sold my last company and started this business in real estate, I knew I was coming into this with a very, very different mindset. Again, like we were just talking about at the very beginning, right? About how we're transitioning out of a very active version of real estate investing to a more passive, even that, like that mindset. And I constantly have to remind myself of that. This serves us very well doing these very active labor and capital intensive style flips. And I love them. And I encourage other people in markets where nobody else is doing them to do them because the opportunities there, the opportunities are there. But it's changed my life in the sense that now I look at everything very much in the way of like, how do I free up time? Everything that I do is a very time for dollars kind of like mathematical formula. And it's, except for the things you love to do, like I still love driving for dollars. So I could pay someone like a deal finder on Deal Machine $1 a deal to identify houses. But I like my Sunday mornings before church with my coffee, driving around, like taking pictures of houses. Like that's something that for me, I don't know that I'll ever let go of because I enjoy it.
Yeah.
So, and that's a self-awareness thing, and people need to kind of decide what makes, sense for them. But yeah, that's a really long way of saying like real estate freed me up, man. It's freedom to do what you want, when you want, where you want.
Yep. And the time freedom is the most important thing because, it's finite. You're running out of time already. So looking ahead, let's say 10 years from now, where will your business be in a decade?
Yeah, so the whole 5-10 year out question for me is one I always struggle with because I envision things changing so frequently, so quickly that I look back on it now, and we just did 5 years in the real estate investment game, and I'm like, wow, look where we've come, right? Looking at 5 years from now, like we're a vertically integrated real estate investment company. We're a supply company. We have an education division. We're doing so many things already. I'm looking to purchase a millworks company, a stone fabrication business, like nice. Integrate all these different businesses into our supply division. We're offering all new educational products and things like that. So for me, like I really struggle to look out past 1 year. I'll just be honest. I don't see it. And that might be short-sighted of me, but it's just the way I'm wired. I can see where we are, and I'm very, very structured in that 1 year. I really try to be and break everything down. What's our 1 year goal? What are we trying to accomplish? I want to read 24 books this year. I want to buy 12 multifams. Like I want to do these, these things, and it's very quantifiable. Outside of that 1 year, I struggle. I really do. What'll it look like? Very, very different from what it looks like right now. Like, I'm very much growth-minded, growth-driven. My team is. And so I'm challenging them to always and ever grow and continue to evolve. So we'll still always and forever be in the real estate investment space. It is the truest way to legacy wealth. It's the best way to go passive and to buy freedom. So I don't see us ever transitioning out of that. But I love business above and beyond the business of real estate. I love the business of business. And so I don't know that we'll be doing fix and flips like we are now. I suspect we'll probably be transitioning into wholesales. We'll be portfolioing a lot more things. And so we'll see. We'll see how it plays out.
I'll have to have you back on next year, and you can give us the whole new landscape that you're in a year from now. That would be great. Well, Gabe, if somebody's looking to get in touch with you and learn more about what you're doing, where can they find you?
So I'm at my name at Real Gabe DaSilva, at Gabe DaSilva across all the platforms. You can look me up there. I'm very much still active. I field all my own DMs, all my own emails, all my own messages. And I get back to everybody. Sometimes takes a little longer than I'd like, but I'm very conscious of that. And if anyone has any specific questions with regard to anything we've talked about today, in particular, ADA levels, it's very much a niche thing. And in a lot of markets around the country, people aren't familiar with it. This may be the very first time a lot of listeners are hearing about it. And if they're curious and if they think they might have an opportunity to do it in their market, feel free to send it along if they want just a second set of eyes on it. I'm happy to take a look. And we're doing a bunch of stuff like in the educational space with our local, if anybody's local and they want to come out and see how we do what we do. We have a bus tour every quarter where we kind of hit 4 houses in varying stages of completion and show people how we do what we do, focus on find, fund, fix, and flip, the 4 Fs in each house. We kind of talk through that. We're just here to help serve however we best can. And just encourage people to take action, like you said a little bit ago, man. At the end of the day, this is all well and good, and I'm a voracious reader. I consume podcasts. I love what we're up to doing this stuff. But at the end of the day, you got to go take some action, and I encourage people to go and do that, even if it's just show up at the next RIA event and tell them you signed up for your license, like you're taking your course or something. Go do something. Go take some action. And so that's it, man.
Yeah, love it. Well, Gabe, just want to say thanks so much for taking the time today and sharing your success with us.
It was a pleasure being on. Thanks so much for having me, man.
Yeah, you're very welcome. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.